want to lose money. It's as simple as that, right? So when we trade, we want to make sure when we trade, we have that incredibly high probability opportunity to trade. Now, that means that we've got challenges. Right from the gun, we've got challenges, because the biggest value is always created in against a trending move. That means you're always selling into an uptrend or buying into a downtrend. That's the single biggest challenge. So what we've got to do is create value inside of a structure that's now bullish or bearish. That's very, very hard to do, as you well know. Creating value inside of a sell structure for a sell is really difficult because you very rarely get any value for a sell inside a sell structure. So what we've ended up with is I've came up with another structure that gives us a perfect example here. So during these white phases here, it's only a sell. During a blue phase, it's only a buy. During these white phases, it's only a sell. During these blue phases, it's only a buy. During these white phases, it's only a sell. Okay? So if it's only a sell, the trades I'm interested in are these sell triggers here. The sells I'm interested in are these sell triggers here. The buys I'm interested in are these buy triggers. Okay? So the sells I'm interested in are these sell triggers here. That one there, this one here, nothing here, nothing here. And then we've got a sell in here. We've got a sell in here, right? So these are all the triggers I'm interested in. Anything where you see red inside of the white zone or blue inside the blue zone is where we can try and find some of these very safe opportunities. Now, we're only looking to try and make 50 bucks or 100 bucks, but we're looking to try and make it 50 times a day, which means that obviously if we make 100 bucks 20 times a day, we're making $2,000 a day. That's a pretty good day, right? So when we're looking at these trades, the idea is that we finally get some sells coming in. Now, why is that not a sell? Because the final piece to the jigsaw is we've added, I showed you what we were adding in the classroom the other day, those lines, the active buyer line or the active seller line. Remember I showed you it? So when I'm looking at that as a possible sell, I'm not going to sell to an active buyer. You see there's an active buyer on that candle? So I'm not going to sell that candle, right? So that's good because that candle meant that I would have sold at that price there on the way up and I would have potentially have got pushed over from the trade. You understand? So I'm not selling to an active buyer. I refuse to sell to an active buyer. So then I get more sell value right there. And I get another opportunity to sell it. But I'm still selling it to an active buyer. Do you see? I'm still selling it to an active buyer. So it's still not a sell. And then I get a third opportunity to sell it. It's on a downtick. I can work with a downtick. But I get another opportunity because the value is still bearish. But this time, I'm selling with an active seller. You see the difference? I'm selling with an active seller. So at the end of that candle, the sell order's put in. The sell order's placed. And the first target price as soon as we get a green. So as soon as we get a green there, we get our target price, we get our first contract out, and we get our stops at break even. Now on this occasion, we actually got stopped out at +1 in the remainder of that trade. Is that a bad thing? Well, we sold at 46, and we got the contract out at 42.5. 14 ticks. 14. That was a 14 tick winner and a +1 on that sell in 60 seconds. So 15 ticks profit, $150 after commissions, and a pretty good trade, right? A pretty good solid way to make a living, $150. I mean, if you could do that one trade every day, you'd still be happy with $150 a day, right? That's a $750 a week income from a single trade. We're trying to do 20 of these trades a day, 30 of these trades a day, 40 of these trades a day to try and make you $50 to $100 every time you press that button, every time you get that sell coming in. As the second sell comes in, you can see we get a sell coming in here, and it's not against anything. You might be saying, what about these sells? Well, you can already recognize why these weren't sells. You can already recognize why there was no sells in these because you were selling to an active buyer. See it? So none of these triggers gave you a sell. Right? None of them gave you a sell. So there's no trade. So there's no selling into that phase there. The next sell comes in, and again you can see with the background there is no active buyer. So that is a sell. That's going to be a sell trade. That sell was at 43.75, and you can see the first green trigger we got was at 42. So that was a 7-tick winner on that sell there. 7 ticks and a stop at break even +1. So we got 7 ticks on that one. Stops at break even +1. And did we get a second exit? No, we didn't. So we got a break-even stop on the remainder. So we got a +1 on the remainder there. So we made 8 ticks on that next trade. The third trade came in, and you can see again another sell with no active buyer, and the sell was at 2.5, 2 3/4. My mistake. 2 3/4. It had an upside drawdown of 5 ticks. So we had 2 3/4, and the first exit was on the red candle at 40. And we sold at 42.75, so that was 11 ticks on the first profit. So we've got 11 ticks profit on that one, on the first contract, and on the second contract, we got 17 ticks. So you can see we're starting to really ramp up the profits here. 15, 16, 23, 34, 51 ticks so far. Plus 51 ticks so far on 3 trades. $500 profit. And you've been in the market for about 20 minutes coming into the cash open. Because we've added this filter, the cash open isn't as scary anymore. We're not having to take the algorithm off during the cash open because it avoids, because we get a lot of active buyers, we don't sell to them, and we get a lot of active sellers, we don't buy from them. So we were able to avoid an awful lot of trades that otherwise would have potentially have cost us money. The next trade comes in right here. And again, you can see it. It's very obvious. We're in a sell zone. And you can see that we're in a sell zone and we get a sell order. You might be saying there's a buy in here, but that's because it's a green candle. So that doesn't take us away. We still get sell value. Okay, we get sell value, and we're not selling to an active buyer. Do you see that? We're not selling to an active buyer. We're selling to an active seller. Do you see the difference? And that put us into a sell trade right there. The sell trade was at 9 1/4, and we got our first profit take at 7s. So that was 9 ticks profit on the first trade. And then the second exit was on the very next candle at the close. We got 33 on the second candle there for 6 points. 25 ticks profit on that trade there. 25 ticks profit. 84 ticks profit for that phase. $850, $840 profit during that phase, which lasted for about 30 minutes. So that's not a bad series of outcomes, is it? That's not a bad series. And, you know, when you're looking at it, you can start to recognize that the filters really do take away not all the bad trades, but they take away most of the bad trades. And it gives us a very manageable number of trades. It gives us a very structured entry and exit price. Very structured entry and entry price. It doesn't give us massive profits. It's not there to give us massive profits. It's there to give us safe profits. And if we can pick up $50 or $100, and this works the way it's working so far, then we've probably got what we need to have. We are now, I imagine, I mean, we worked until about 2 o'clock this morning getting that final filter absolutely correct. We finished up at 2 o'clock, but it means that we obviously haven't finished it yet because we haven't got the actual. I want that arrow on the trading view chart. I want to have the arrow on the trading view chart where the entry is, or I want a line on the trading view chart where the entry is, and I want the exits where the exits are. I don't want to be interpreting the idea. I want to see it physically on the chart. And physically on the chart is obviously what we're going to be doing on the Thursday between Christmas and the New Year. So we're physically on the charts between Christmas and the New Year, so that it's actually on the screen so that you can see it as it's printing. And that's obviously what we're going to be looking to try and top this little program off with at this point. So that's good. I'm very, very happy with it. And long may it continue. I'm telling you, long may it continue. Big measure on bonds, did target beautifully, and we did get a nice walk away into the target at the bottom edge. We got the full measure as you would expect. It has bounced off that price many times, and obviously you're looking for that reversal opportunity. Did you see the opportunity to buy it? Well, this was the opportunity that started to show up here against the diverging storyline at that stage. So you'd have been able to look at that there and say, well, you know what, I've got a small diverging storyline developing in that narrative there. I like the opportunity. Maybe that's going to be the opportunity for me to get the trade on. At the same time, I wasn't seeing an awful lot in the crack spread, the touch spread, but it was there. It definitely was into that higher price. I mean, it was testing the prior highs when that trade was setting up. It's marginal at best, but it's still visible. I didn't like the next one. That's why the price moved to the upside. Because the next one actually didn't have the divergence properly lined up, did it? So it was kind of back to front in the next one. So there was a very, very difficult buy, which meant there was a lot of people crossing spreads to get into the buy trade if they liked it enough. And that's why we got the big projection price through the top edge. Remember that idea, if you don't get the bottom edge, it's going to go a lot faster, it's going to go a lot further. It's just one of those things, isn't it? It's one of those weird combinations that when you get filled in a trade, it's probably not going to be a great trade. It's just the way it always will be. It's always the way it's been in the past. The trades you never get filled on are always the best trades because you never get filled because they're moving really quickly. The trades you get filled on are the ones that are not moving, therefore you get filled on them, which makes them probably not as good a trade in the first place. It's crazy when you think about the logic behind that, but it is what it is. You just got to deal with it. Classroom, guys, in 20 minutes. Classroom in 20 minutes to finish off